Hey, this is Dan Fitzpatrick at Stock Market Mentor. Listen, yesterday I closed a trade for our members at closer to 1,500. And I want to explain this to you. First of all, we have an active trade list that I personally keep. And what it is this is a trade list that's intended to do two things. First of all, make you money, okay? I give you everything. I tell you where to enter. I tell you where the stop should be. I give you the rationale for the trade. I explain the chart and the underlying reason for why I do this. So this is an opportunity for people who really want to learn to trade better. If you want to improve your trading results and your consistency, this is a list that is really helpful because I do the same things over and over again. And it's a cookie cutter approach. It's based on a specific setup within a pattern and a trend, a specific methodology for setting stops, et cetera, et cetera. And this thing is doing very well. This active trade list is really performing well. I'm not booking 500% gains in stocks, but what I am doing is, like in our trades over the last 30 days, our batting average is exactly 500. We're batting 50%. And our average loss is 5.83%, which I'm not happy about, frankly. That's too much. I really feel like we should be getting, I shoot for 3.5%, and that requires specific entries. It requires getting a stock very, very close to where it breaks out, or if it's a pullback buy, very close to that support level, which if the stock falls below a certain level, then there's something wrong with the stock and we got to get out. 5.83, that's almost 6%. I'll be honest with you, that sucks. But our average profit is 16.5%. Okay, so let's round the loss up to 6%, and let's round the gain down from 1650 to 16%. That means that I'm making 10% on average. 10%. And these trades are pretty quick. These trades are anywhere from 2 weeks, sometimes quicker than that, 2 weeks to a month, something like that. And the idea is to just roll your money over and compound those gains. So let me explain to you what we did with Shopify. I actually bought it here on the first day where it looked like this decline was over. Okay, so this is what the trade looked like. Okay, and we'd made other trades, but don't pay any attention to those. It's not really what I'm talking about. And these arrows should actually be red, but so this was a day that I decided to buy the stock. And because of where the stock was, I really felt like I needed to keep a looser stop on it because it did tend to be pretty volatile. I felt really good about this. So I'd put the stop down below the 50, right? And then the stock runs up. It did have, where'd we get a pullback here? There it is. Okay, we got a pullback here. Now, I put the stop right below the 50, right? So you say, well, crap, should have been stopped out here. No, because I put the stop below the 50 based on where it had been here. So this stop actually was well below, and I didn't raise it. We didn't have enough of a gain to warrant raising the stop. So this stop was well below where the stock pulled back. Should I have taken the trade out? Should I have closed this trade out when it broke the 50? No, because a lot of stocks fall back to the 50-day moving average, trade even lower, sometimes substantially lower, and then just slingshot higher. I wouldn't put this in that category, but I would say that we got the stock at the low end of the range. It ran up, then it fell back, did not get the stop hit, did not panic, just stayed in the trade, did not add here. That wasn't my choice. I just chose not to, could have. Maybe should have, but I didn't. That's trading. I don't like to add to a losing position. I don't like to add on the way down. I'm obviously wrong on the stock, just not wrong enough to be out. But so the last thing I need to do is be putting good money into a trade that's not profitable. And so I hung on to the trade. The stock comes up here, and we actually played kind of like good stock, bad stock with this, where I had a bunch of lines drawn up here, and this was where the good stock zone is, and down here this was where the bad stock zone is, something like that. So once the stock got up to here, then it was just a matter of riding this stock up as long as the trend persisted, because the thing is, you got to remember something. We're in stocks looking for this kind of move. This is what we want. And so if you see the stock running in your direction, don't be quick to take a profit and say, oh, the last trade, excuse me, the last trade I had was a loser, or the last two trades I had were losers. I better book this profit because I'll feel better about myself. No, wait for the stock to either get ridiculously expensive, or for the stock to give you some sense that the trade is over and it's time to take profits. So what I was doing today was I was considering just taking half off the table. I mean, we were up like 27% on this trade. This was I think 28% actually, but we were up a lot relative to what my typical gain is. Again, it's 16.5%. Over the last 30 days. I always like to look at the current market and see what's happening with my trading relative to the market. So we were up nicely on this, basically twice what the average profit typically is. So it's time to book those gains. I was thinking about booking just 50% and then setting the stop at break even for the remaining. And then I've at least locked in. Think about this. If the current gain is twice what my average gain is, if I take half off the table, set the stop to break even on whatever the entry was, then the worst case scenario is I have a gain that is equal to my average gain on my winners. Okay, that's a pretty good deal. I just chose not to, because the stock came right up against 1,500 and then failed. It's still doing okay, and for all we know, the stock could just continue up here, but their earnings are reported in 7 days, and what I didn't want to do, frankly, is risk the stock like not doing anything and then risk the stock pulling back. Now each day goes by, I'm closer and closer to earnings, and I'm in a situation where I'm saying, crap, I wish I'd sold when the stock was up here. Now the stock's pulling back and it's kind of eaten into my profits, and I've got earnings right around the corner, so I don't have staying power. So it just made more sense, and it does this sometimes, it just made more sense to close the entire trade out. Just take it. I mean, if you've got almost a 30% gain on a trade that you haven't really had on for very long, take the money and run. Even Steve Miller tells us to do that. And I don't think that guy was a trader, though he's a heck of a guitar player, though I have seen him in concert and basically just kind of stands at the microphone and plays. But, they say white men can't jump, but apparently they can't dance either. I know I can't. Anyway, so I just wanted to explain this trade to you and why I got in, how I stayed in, and why I'm getting out. So now I'm really happy with this trade. If this stock continues to move up, I'm okay with that because I had a good trade, a good reason for entering, a good plan for staying in, and a good reason for exiting. As I look at this chart, it seems to me like the stock's got plenty of upside room. I just didn't want to go through this ride anymore. I'll wait for a better entry or just move on with that money to something else. So anyway, I hope this helps. But look, I want to invite you to join Stock Market Mentor. I do videos every day. They tend to be about a half an hour long. However, we have a fast mode, kind of like podcasts. You can play it at twice speed, and my voice doesn't sound like this, so it's really easy for you to listen to and watch and learn from because the mind tends to work faster than the mouth. So, although when you say the wrong stuff, it's because your mouth worked faster than the mind. So, anyway, I do these videos every day. We do keep this active trade list going, so it's a good opportunity for you to learn while you make money. I could go on, and we will be sending out, we're going to send out some testimonials from members that have absolutely beaten the snot out of me in their performance. You know, nice when all you have to do is concentrate on trading yourself as opposed to teaching and scouring for new trades and stuff like that. But we've got people that have made literally millions just over the last year. So I want you to be one of those guys, okay? As I say, you only quit when you fail. It's always too early to quit. And so I want you to just try to imagine for a minute the kind of stuff you can accomplish if you set out to do something and you know that you cannot fail, okay? Sign up with me. Get in my deal, 30 days for free. It doesn't cost you anything. Get into my rotation on these trades, and I promise you that you're not going to be quitting. You're going to be making money, okay? All right, I'm Dan Fitzpatrick. I'll see you guys next time.